So welcome everybody. I'd like to thank you all for joining us today at our interview session with some of the most important venture capitalists, not only from Spain, but also from Germany. And today I am very, very excited to have Christian here today. Christian is partner at Capnamic Ventures. And I am not going to bore you with trying to explain myself who Christian is or who Capnamic is. So I will give the word to Christian so that maybe you can tell us a little bit about yourself. What is your background? And then obviously also what is Capnamic and what's your value proposition on one side for your investors, but also for entrepreneurs that you work with.
Yeah, perfect. Thanks, Dennis, for the invitation. It's a great pleasure. Maybe to give you a couple of words on myself. I'm a business student by training. And have entered the venture capital scene in 2010. I must say I've fallen in love with the whole spirit and energy that you have when working with young companies, and thus never left again. And I'm not intending to do so. At Capnamic, we're a very typical Series A to seed investor looking for early stage companies to work with. We are focused on digital companies only. So as a basic rule of thumb, you could say, if you can touch it, we're not going to invest. Our focus is furthermore on B2B topics. So we do have the opportunistic B2C investment here and there, have done more with our first fund. But since we raised our second fund in 2016, we are really focused on B2B stuff, have done roughly 40 investments across the funds that we've raised over the last 10 years. And yeah, that's basically the background that we're having. Typical institutional LP background and a lot of corporates, both German and international, including companies like Cisco and AXA, but also the large savings banks organization in Germany.
Cool. Thank you very much for those insights. So you spoke about your investment philosophy to a certain extent, what kind of companies you like to invest in, what you don't invest into. Maybe you can tell us a little bit as well about your main investment criteria when you're actually analyzing companies, and maybe also give us an insight if that has changed a little bit over the last couple of months, especially.
Yeah, of course. So I mean, as I said, we're late seed to Series A investor. So there's usually not a lot of numbers that you could crunch. Of course, you can go into the business model and check how they plan to grow, and if the variables add up, but usually we do not have a lot of historics to work with. So that's a very important starting point when doing what we do, right? You have to look into the market, you have to look into the product, you have to start discussing with a lot of people, and you have to start formulating hypotheses very early in your career or in your fund life cycle, because that's the important part. You should kind of have an idea of where things are going to happen over the next 10 years, or at least over the next 5 years, when it comes to where interesting companies will be founded, etc. At Capnamic, we have basically 3 things that we try to follow, which is team, timing, and technology. And to give you a little more flesh to the bone on these 3, we look at complementary teams. So we have a preference for founding teams of, let's say, 3. Where you will have somebody who is very strong technologically wise. You have the typical CEO who's the most outgoing person and who kind of has the strong vision of where he wants to take the company. And then you have the kind of internal guy. It can be COO, can be CFO. It doesn't really matter how you call that person in the first place, but he's basically the business guy or the business girl in the team. So this is like what we look at. We have, of course, a preference, like everyone, to see seasoned entrepreneurs, which means if it's a second, third, or fourth time, it kind of gives you additional credibility because you have done mistakes before, which you are unlikely to do again. But it's also interesting to work with first timers if they have great ideas. It depends a little bit on what they want to tackle. The deeper they want to be in some kind of really old-fashioned industry, for instance, the better it can be to have been working in that industry. And in that regard, it is sometimes beneficial to have a couple of years more experience than less. Looking into timing, I always look at the company that we invested in back in 2016. Company is today called Staffbase, back then was called AO. And what they are basically doing is they bring the intranet, which large corporates always have, from the desktop browser onto the mobile devices of the employees. And why is that a thing for timing? You had basically two trends that were only enabling what they are doing today. And the one trend is the overall penetration of smartphones, which reached, globally speaking, something in the high 80%. And if you exclude Africa, which is a little lagging here, you were already in the high 90% penetration. So you could assume that a majority of the people that would be targets for this mobile intranet solution would have a smartphone, which is real basis to be reachable here. And then the second trend that we saw and that kind of enabled Staffbase is the bring your own device policy. So unless a company allows you to have content from the company on your private device, it doesn't make sense to have a mobile intranet solution, especially for blue-collar workers, because they will not have a business phone. So they must be able to use their private devices. And those two trends added up to something that really gave the company very good momentum, and they've been capitalizing on that quite frequently. However, if you had started the same company 10 years before, it wouldn't have had a chance because there simply weren't enough smartphones in the place. And finally, what do we mean with technology? In the end, we're not talking about pharma or something like that, where you have patents that give you real or at least perceived protection or so. In the end, every technology, every line of code can be reproduced by another smart team. But what we mean with technology is something that actually does something, right? So the capability that a product is actually doing something in itself. So it's not just a fancy interface, even though interface is always important, but there needs to be some magic, something's really happening, because that kind of gives you probably even more protection than a patent would. Because if a product is sticky and if a customer is frequently using a product, then he's unlikely to churn or to go to another provider of that or a particular or a similar service. Even if it's a bit cheaper, because he's happy with the product. It really does solve a problem for him, and that's what we mean with technology. So these are like the three most general aspects that we look in. But if you look also at recent developments, and if you had to weigh out these three pillars, then you can say team is the most important, and that has been shed light on even more through the COVID crisis. I mean, we see that, in these times that nobody can predict, and no business model kind of, especially in the early days of company, has the robustness to, really withstand that kind of crisis where basically, especially in B2B, budgets dry out completely in a lot of segments, and where you're simply not going to be able to keep on selling the way that you have been selling. It's utmost important that you have teams that are flexible enough to really adapt to the market environment. So, for instance, a couple of our companies have started some kind of value for money projects where they still sell the software or the product that they're having, but the customer doesn't have to pay. So you basically sign a contract and they only pay after they get a certain minimum value out of the software. So for instance, one company is selling travel expense management software, something that's really hit right now because nobody's traveling. But they're still approaching CFOs, and CFOs are still signing contracts with them because they know we only have to pay once people start traveling again. And with that kind of smartness, you can still pursue a business and still grow it, even if there's something that you haven't been planning for. And even if there's no pandemic, what I've learned over the past years is you always have things that you haven't been accounting for in your business plan. And that's why, from our perspective, teams are the most important factor when looking into what really makes a deal go or not go. And that's, for us, the most important thing when deciding on which investments we want to do.
Cool. I mean, maybe just to jump in there quickly, we've also seen that obviously the team is, or we believe that the team is that what really drives the companies really. And also the pandemic has shown sort of who are the real entrepreneurs who are really burning for their idea and for the problem that they're trying to solve. So I can only sort of underline what you just said, that this is splitting up between the people who are really behind an idea and who are founding a company to try and take advantage of a given environment and really make it happen. You also talked about, well, obviously you prefer seasoned entrepreneurs, and that always makes it a little bit easier to actually, well, analyze and maybe trust that they're going to build another great product. When it comes to, let's say, less experienced founders or first-time founders, how would you then actually go about evaluating those teams and those entrepreneurs?
Yeah, I think that's probably one of the most difficult tasks that you have to go through in any due diligence, given that, you know, it's a little bit like dating. You always only show your good sides, right? Only after a while you will see that the person that you've been meeting is different, and you're usually already in the relationship. So we kind of have to try to look behind the curtain of what they want to show in the first place. And that's naturally something where you have to be really careful, because you also have to make sure that you're establishing a good relationship with them and a trustful relationship. So what we do is, first and foremost, spend as much time as possible with them. And despite COVID, we've decided to not do any investments that we haven't met. So we're not going to invest in a team where we haven't had any real personal interaction. Mm-hmm. I think Zoom and all the other, you know, video platforms are doing a great job helping us through the pandemic. But some things like, you know, social vibes are difficult to perceive. And you will not get to the, in the end, necessary level of small talk with people where you get to know what their sports favors are and what they do in their leisure and all that. If you're just doing Zoom calls, because they are always very focused and very, you know, to the point, because nobody really likes being on camera for a whole day. Yeah. So that's for us the most important thing. And if you spend enough time, you kind of get a sense on the dynamic between the founders, but also get a sense on, do you think they're authentic or not? However, we also go beyond that and try to reference them as much as possible. So we speak with people they've been previously working with. In case of you would have, which we barely ever have, but in case you would have founders that have never worked before and come straight out of university, we would probably even try to, you know, get in touch with some of the lecturers to get a bit of a sense, or people they've been doing internships with. However, saying that, as I said before, we usually don't have teams that have never been working before. So it's really about, how do they react? How do they generally act? Do you think they're authentic? And then you will learn a lot about their personalities when you start making, you know, challenges on the assumptions that they are making in their business case. So that's in the end our job, right? We need to understand what are the core variables in their business cases. And for us, it is important to really challenge them. Is that the right KPI to look at? And is that the right customer profile to look at? And we will naturally always go about it with questions that are kind of suggesting it could be different. Mm-hmm. And from the reaction that they will usually have towards these kind of questions, you see, are they reflected? Are they open for feedback? And are they good to work with? So that's kind of our way of getting a sense of what working life would be with them. And then, frankly, and that's not a difficult part in COVID times, but drinking beer is right. In the end, we're up for a 7 to 10 year relationship. And you do not really want to enter that kind of relationship if you don't feel comfortable sitting in a bar with that person. So yeah, that really is a factor. There has to be some kind of personal connection, and I think that is also, aside from all the other things that give a positive or negative outcome in if you want to do an investment, it's always also the personal relationship with the company that makes the decision.
Yeah, I completely agree. Also, something where I would say that we probably have different approaches between Capnamic and Faraday. You were talking about before that the stages that you enter a company, there's usually no real numbers that you can base your decision on. So at Faraday, for example, we always try to look at companies, or we have a minimum requisite that companies actually have 6 to 12 months of revenue. Because we believe that sort of behind those revenue numbers, independent of size, you can sort of see what kind of metrics are these companies tracking, Do they have an idea or a validated assumption of who the customer is, and actually do they have a product or a service that they're already selling? So maybe that's a difference between the German and the Spanish market, because we also have a lot of our Spanish investors who will be looking at this video interview. You talked about late seed to Series A. How would you sort of say is the ratio between companies at those stages that actually do have revenues and that don't? Because in Spain, I would say that at the late seed stage, most of these companies have already been in business for 6 to 12 months at least.
I mean, we're usually not entering businesses where we have zero revenue, right? What I mean when I say is there's not a lot of numbers to work with is it's completely homeopathic, right? And the sample size is way too small in order to make any, valid predictions on how KPIs will develop, right? So if a company is doing no revenue or 10,000 euros of revenue per month, is basically similar, because there's no real validation. I mean, everybody will find for every product and anything he does, people somewhere on this planet that give you enough revenue to reach 10,000 per month. Yeah. That's not there. There's no proof with it, right? So what I mean is we don't have companies. Usually, we don't have companies that go beyond 600,000 euros of ARR, so annual revenue. So that would be a size where I say, okay, if you manage to get 50K of revenue per month, then you have like an initial product market fit kind of indication. And that would, I mean, in the end, that would of course mean you have to pay a higher price. If you go or if you invest into a company at a stage where it does 10,000 monthly recurring revenue, then you also acquire the market fit or the market risk, so to speak. So that means that risk means you pay a lower valuation. The higher the revenue, the lower the market risk, because the more data points you have on how much potential is there, and thus the higher the valuation is going to be. So in the end, it's a cautious decision that we usually take, that we use other forms than just revenue to kind of get a good feeling around whether there's market risk or not, and then still pay the price for there would be market risk, even though we have a good feeling that this market risk is not that bad. Okay. So that's why we've decided to invest somewhere between seed and Series A, but we will, in 95% of the cases, not go into a company if it has only a pitch deck or so. So we want to see something like an MVP. We would like to see that, there are first customers looking at it, just to have a sense, that somebody at least understands the problem. But everything beyond that is something that we're happy to support the companies with and kind of get our gut feeling around prior to the investment decision by making market research and doing a lot of interviews with people in that particular industry.
Okay, great. Thank you for those insights. That's very, very valuable for sort of everybody who's looking into this. So maybe now to dive a little bit deeper into the market as well. So I think you mentioned it before as well, that your focus at Capnamic is mainly Germany. Obviously, there's also Austria and Switzerland. I saw that you're at least looking at some deals around there. Maybe also for the non-German viewers, what would you say are the strengths of Germany? Why is apart from being in Germany, why is your focus so heavily on German startups, and what makes it special?
Yeah. To begin with, I wouldn't underestimate the factor of being in Germany and knowing the whole culture and how things are done and having network here, because that is, as I said before, the most important part is spending time and being able to speak and meet with every team that I'm investing in within 1 hour. If I take the time that I have to go to the airport and from the airport away, it's quite an important factor. And the fact that I know what German legislation looks like is also an important factor. So the earlier you go, the more likely it is that we will stay in the DACH region, because we simply know how things are doing here. We've done investments outside, but we usually try to do them together with a regional lead investor. So we will only co-invest in those regions. But we have done deals in France, England, the Netherlands as well. Coming to your question, why do I think Germany is a relevant set for an investor who wants to invest successfully? I mean, let's make it top down. And the first thing I think, if you look at B2B, is that the size of the economy is simply by far, I think, the largest in Europe. So if you want to become a European champion, you will one day or the other have to win Germany, because otherwise a company in Germany will just grow to a proper size and then internationalize with much more backing than you could possibly have. So from our perspective, Germany is a very, very difficult market to crack. And then it's better to crack it on day one than try to do it later. It's very similar if you're a German company and try to go to France or England or somewhere else. It's always difficult markets. But I think the size of the economy here, it gives you a certain benefit if you decide to start the early days in the German market.
Maybe a quick question in between. Sorry, why would you say is Germany such a difficult market to crack?
That one would be easier to answer for companies to try to crack it. Well, I think we still have a decent amount of people that kind of feel their counterparts have to speak German with them, which sounds strange in the 21st century, but that's what we realize very often. If you try to sell software to large corporates, one day or the other you will end up in German bureaucracy where things have to be German, etc., etc. And I think that's what a lot of companies that come here with their, I don't know, London or Paris worldwide culture and English spirit, which of course in our industry is normal, but which doesn't work if you go to old-fashioned or mid-sized companies here. So that could be in the end a factor, which is a bit cultural then, I think. Mm-hmm. Other than that, I'm really struggling to tell you. I can just tell you that a lot of companies have burned a lot of money trying to conquer the German market and have not been successful. I would have to look into this deeper. I haven't really thought of it because I'm always looking at it from the outbound perspective more than from the inbound perspective.
Sure.
Well, what is interesting in the market outside of its size, which is just a given. I think we have developed over the last 10 to 15 years one of the most mature ecosystems when it comes to startups. It all began with Berlin investing heaps of money into the startup ecosystem and making it easier, making it cheaper, giving tax benefits to attract companies, which has formed a very unique ecosystem, I think, and which has now spread across the country. So we have a lot of hotspots that are in Munich. We see a lot of companies coming from Hamburg, and I think the unique thing in Germany is we're not that focused on our capital. So it's not like France and Paris where a majority of things are happening, but we're a federal state, and given its federality, you see companies coming from everywhere, and that often allows for the not typical startups to become really successful. Which kind of bridges me to the next topic, and that is, from my perspective, all the most intuitive things that you could digitize have kind of been digitized now. So we are beyond e-commerce to make the most obvious point. And where are we now? We are now at the point where we are starting to increasingly try to digitize things from old economy / industry. So we're going into the processes there. We talk about Industry 4.0. We talk about a lot of intelligence coming from machines that are producing things. And we talk about predictive maintenance. We talk about the digitization of logistics. We talk about all these things, including robotics. And if you're B2B, then you need customers for this. So you need a lot of industry customers. And frankly, in that regard, there's no way that you can pass Germany, because Germany is by far, I think, the biggest producer in the old industry stuff. And we have a lot of companies that are really successful with this for a century or longer. So I think if you want to digitize in this industry, you will have to at one point speak to these companies, and they will be a good target. So it's good to be close to them. And then we come back to the cultural point that I had before. At the same time, I think you will find superb entrepreneurs with these kind of industries or these kind of segments here, because that's what I said in the first place when we were talking about teams. It is easier to sell to some industries if you've been in those industries, if you have felt the pain, if your counterpart at the customer can, treat you serious because he knows you know what you're talking about because you've done it. And in that kind of things, we often see that people that have been 10, 15 years with a large industry corporate leave the corporate and start a company. They are, I don't know, somewhere between mid 30 and early 40 maybe. And they really want to do something else than just, go on as they did. And they start something in a very not intuitive industry to go to. So for instance, start something that goes along the lines of metal trading, which we would have never thought of, and which probably a business student who's just leaving school doesn't think of because he doesn't know the market enough. And if you look at that kind of seasoned entrepreneur in that kind of, old-fashioned and not intuitive industry, which, as I said before, in my opinion, is where digitization is going to happen next, then you need a combination of people and industry, and that's what I think is something that you can find here quite well. Plus, and that's now a factor that's becoming, or it's increasingly deteriorating, but valuations are still a little lower than you can see them in Paris or London. They're increasing rapidly, and they're surging as they're surging everywhere. But I think it's still an okayish price, which we get as feedback from a lot of the US investors that deem our deals to be really cheap, even though for us they already feel quite expensive.
Yeah, I guess that's maybe something that's sort of traveling north or then to the US, like you just said. So I would probably, or I can probably say that from the valuations that we see in Spain or in Portugal, that are still even lower than the ones that we see in Germany. So from time to time, there's obviously very interesting chats within the team when I propose an investment here in Germany, where valuation is probably 3 or 4 times higher than you would expect from a similar company in Spain.
Yeah. I believe that.
Cool. Thank you very much for those insights. I would say to maybe wrap it up, a last question from our side that obviously sort of is burning for everybody, and you already did some mentioning of it. We've obviously gone through and are still going through a phase of a pandemic with COVID sort of being everywhere, even more so in Southern Europe. So especially in Spain and Madrid at the moment, they're actually going back to closing certain districts right now. How would you say has that affected the way that you're interacting with companies? Has it affected it? And do you think this is going to change venture capital in the future?
Yeah, I will try to answer it, both questions one by one. From how does it change the way we work with startups? I think in a phase like this where you have a macroeconomic shock, it becomes even more important that as an investor you are the rock who keeps calm to a certain extent. So especially younger founders will, they have never experienced a crisis before. Maybe they have been still in school during the mortgage bubble 15 or 12 years ago. And it's important to, stay analytical. Don't panic. Usually in the first days, everybody's entering heated discussions about how do we cut costs, how do we do this, how do we do that. A lot of activity can be a little, let's say, rushed. Can be then also badly advised if you just would execute it. And it's good to try to bring the founders back to a calmer level where they look up the situation, where they start analyzing what they want to do, where they see how's the market really developing, wait for the first 2 weeks and then decide where to go, in order to really find the ideal setup for that kind of situation. And that's in the end our role, right? We have to be there and support them and give them the sounding board to make the right decisions and to have the right attitude. And I've realized that, you know, the calmer you stay as an investor, who presumably from a startup founder's perspective has seen a lot, whatever a lot means in that regard, the calmer the company founders will stay, and the more they will get to the point that they say, okay, maybe we can pull through this, and then they you know, have their heads and minds open to come up with creative ideas how to get through this crisis, because in the end the solution will always have to come from them. Creative ideas, like what I said before about, you know, value for money projects, etc., that has to come out of their minds. Of course, we can advise them and support them with things like laying off parts of the team, or at least employ furlough where necessary, and we can support them in other cost-cutting measures, make sure that, you know, marketing is doing well, and all of that. That's easy for us. We can support with that. But, you know, the creativity that differentiates you from I've pulled through the crisis, or I've really pulled through the crisis and kind of made a benefit and am not weakened after the crisis, that has to come out of their heads. So we're the ones that have to help them to have enough room in their heads to do this. I would say from what that means on a day-to-day basis these days, we don't travel. We travel way less, which first and foremost is good for the environment, right?
Yeah.
Less flying, less driving cars, less fun travel, so to speak. Which is also good for us because we're home more, which most of us probably will like. We're doing much more virtual, as I said before. I think that kind of has a bit of an impact on how, you know, your relationship to one another can be impacted. So I try to more often just, you know, call up on a founder, see how he's doing, have a bit of, you know, non-agenda talk, just see what's happening. Generally, I think we will see less travel going forward because we realize you don't have to fly to every meeting, and a lot of meetings will be nicely executed and work maybe even more efficient if not everybody's in the same room. Because sometimes, you know, how does board meetings go? 5 investors in the room, the first say something and the other 4 feel that they should say something just, you know, to prove their value. That happens less if you're in a virtual meeting, right? People really just say something if they have to say something. Again, because nobody likes to be on camera all the time. So there's going to be a different style of how much we have to travel. We still will have to travel. It remains a travel job. But, you know, it's going to be a little more, you know, diligent with regard to which decisions you take when it comes to travel, when you have to go where, and how many of the meetings you can do from home. Yeah, other than that, it's really about how you try to support the companies, and that really hasn't changed, and I don't see that changing going forward.
Yeah, cool. Yeah, that's very interesting that you said that, and again, I have to agree. We basically did the same at Faraday. I mean, we sort of had weekly meetings with the founders, just gave them the confidence and the calmness to actually take reasonable decisions, have them interact with each other to sort of see what are the best practices that one founder out of the portfolio has maybe sort of been able to apply. So that was a very, very helpful comment there again as well from you to say, you're the rock, you need to stay calm, you need to give them the confidence to sort of think creatively for the future. Very good. So Christian, thank you very, very much for your time. Those have been some very cool insights. Thank you for giving us some more detail on Capnamic, what you do, what kind of startups you're investing in, also to let us know what you believe is so special about the German market. I look forward to, in the future, maybe actually sharing some deals with you as well. Who knows?
Absolutely.
I think we have a very similar approach on how we want to interact with people. So again, thank you very much for your time, and all the best.
Thanks for having me. And yeah, it was a great pleasure.